credit score with little effort. Once again, how do you raise your credit score with little effort? Hey, 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 it's me, Tiffany the Budgetnista, your favorite financial educator. I love you just because you're a dream catcher. I feel in a very singing mood today. There might be a lot of singing today, so you'll deal. So today is day 5 of our 6-day money quick start. I hope you've been getting your life. If you have, you know the drill and the deal. Tag your mama, tag your friend, tag your cousins, and them. Today we're talking about credit. Never forget it. I told you I'm in a singing mood, and whether I can sing or not is up for debate. I'm feeling like real cute because I got a red lip. My husband came in here 2 minutes ago, was like, you look cute. So I'm feeling myself today. All right. Super excited because I'm going to go over a quick start, something you could do right away to start getting your credit on top. Okay. Something you could do within 24 hours. Again, tag, share, save this video because we're going to dive deep. Credit is an important component of something that I have dubbed financial wholeness. Remember before I talked about, I don't know if you guys have been listening. Hopefully you have been, but I shared how I no longer really believe in the pursuit of financial freedom because here's why. Because typically when people think of financial freedom, they're thinking about having a pile of money. They ain't got to work no more. They're 35. They get to retire on a private island. And certainly I have seen friends of mine, and this has certainly happened, but they are the exception, not the rule. And I know it's not as popular right now because everybody's talking about, becoming millionaires right now. But I want to teach to the rule because the vast majority of you are going to be living out the rule. So how do you have a strong, holistic financial base? That's what I lean into because quiet as is kept. I know people with a pile of money and the rest of their financial life is a mess, which means that pile of money is in jeopardy, okay? Because if all you have is that pile of money and nothing else, you're not likely to keep that pile of money. All right, so I'm so passionate about financial wholeness, wrote a book about it. Wrote a book called, matter of fact, I forgot to put it, Get Good with Money. So Get Good with Money is 10 simple steps to achieving financial wholeness. I'm gonna put it in here. And I wrote it because I wanted to write something that a guide, like your ultimate adulting guide to money. It's these 10 simple steps, starting with budgeting, ending with estate planning, because you have to have proper insurance if you want to be financially whole. You want to have your money team, your financial professionals, and who are they and how much do they cost and how do you find them? You want to make sure that you are that you have a positive net worth. You want to learn how to earn, which that's tomorrow's class. You also want to have a strong budget, a credit plan, a debt plan. You also want to learn how to invest for wealth and retirement. Those are 2 different types of investment goals. You see, this is what financial wholeness looks like. It's not just about making money because you cannot just make money. How do you protect the money that you make? How do you pass on the money that you make? How do you manage the money that you make? Do you see? Financial wholeness deals with all of that. That's why I'm excited about Get Good with Money. February 1st, if you're watching live. So literally, I think it's like 4 days. In 4 days, you'll be able to pre-order Get Good with Money. Okay, I'm excited. All right. So today's class. But make sure you go to getgoodwithmoney.com to take the financial wholeness quiz. It's a 2-minute quiz. You should know what your financial wholeness score is so you know specifically what to work on. After you take the quiz, an email is sent to you. I saw some of y'all say you didn't get the checklist because I sent a checklist after you take the quiz, but check your spam, type in financial wholeness, maybe into your email search box. Sometimes email is funny in that it will block emails. And if you still can't find it, go to budgetnistatech.com. It's our tech support page. And you could put in submit a ticket and we'll send it to you. Okay. All right. So let's get started. How do you boost your credit score with little to no effort? Again, hey, I am Tiffany the Budgetnista, your favorite financial educator. And what you're going to learn today is a quick start, something that you can start to do within 24 hours. I want you to understand when it comes to your credit score, what is a credit score? I want you to think of your credit score like your financial, like I said, I always have my lesson plan. This today is a little long. Today is 4 pages on for y'all. So a credit score is your financial GPA, right? It lets potential lenders know how likely you are to pay back the money you're asking for. So it's almost like how your GPA in school, right? The purpose of your GPA in school, let's just say you're in high school, you have a GPA, colleges look at it because what they're looking for is how likely are you to do well at their school, right? So your college GPA, especially if you're just graduating, allows, sometimes they ask for employers to see how likely you are to do well at that job, right? And so that is what your credit score is. It is your financial GPA. It is an average of specific financial choices. People will always say, Tiffany, real quick, while we're here at Whole Foods, I see you over there smelling the oranges and squeezing the tomatoes. Hey, girl, y'all be stopping me in these streets, and I love it. So if I pay off this loan, student loan, what my credit score going to be? And I'm like, let me get my crystal ball. Psych, ain't got one. There's no way to know. Ma'am, you want to know why? Because your grade, that's like asking me, I meet you senior year in high school, and you say, if I get this A, Tiffany, and this A in Spanish, what's my GPA going to be? I don't know. I would have to know, well, what did you do junior year? What did you do freshman year? You see what I mean? Like, I would have to see your other grades and the weight of your other grades. So one financial choice, there's no way for me to determine what that one financial choice, or even you to determine what that one financial choice is going to do for your life. Does that make sense? Okay. But this is what you can do. When it comes to your GPA, your financial GPA, understand that the last 2 years hold the biggest weight. Actually, someone asked me the other day, they said they were trying to buy a house, and their husband saw that they had some debt that was super old, and he was like, should I pay it off? And I said, skirt, wait, because if you pay, I'm not saying don't pay it off, but get into that house first, because if you pay off an old debt that's like 6-7 years old, and you're looking to purchase a house, that 7-year-old debt plays little to no effect on your credit score. Now, I'm not saying that the mortgage company is not going to look at the debt and say, what's this? I'm talking about your credit score. If you pay off that debt, you have now effectively made that payment and the late payments that came along with it, or the non-payments that you had not paid all this time, you've made it now within that 2-year span where it holds more weight. Do you see? It's almost like saying this, like, are you a good driver? So let's just say Pamela wants to borrow my car, and so does Lisa. So Pamela says, girl, let me borrow your car. I've only ever been into one accident. I'm like, I don't know, Pam. And Lisa says, girl, forget Pam. Let me borrow your car. I only been in one accident. I said, I don't know, Lisa. Well, Pam, when did you get into a car accident? Pam said last week. And then Lisa says, I have not. The car accident I was in, the one car accident I was in was 10 years ago. So Lisa's 10-year accident doesn't have as much of a bearing on who she is now. So I'm more likely to lend Lisa the car. Pam, girl, your mess up is fresh, sis. You can't borrow my car, right? And so that's the way it is with your credit. So if you are making good payments or on-time payments, or if you're late, either way, the fresher those decisions are, the more of it is a bearing on how you activate, or how you navigate now as a borrower. Does that make sense? Does that make sense? I know it makes sense. I'm a good teacher. Okay. I know it makes sense. Okay. Just giving you that T. Okay. So the steps, we have 4 steps today instead of 3. So numero uno, step 1, start with a credit card with a 0 balance. Now you might have to pay down this credit card. Maybe you might consider, some people might be like, I was going to open up a credit card anyway, so maybe I'll make this my credit card. I like to call this my jump like Jordan card. So I grew up, I know all about LeBron. That's cute, but I grew up in the Jordan era, and Jordan used to jump and stay there. That's what we want for your credit score. So I literally call this the jump like Jordan method. And so I call this my jump like Jordan card. So literally it's just a credit card with a 0 balance that I'm about to show you how to use it. So either you have a credit card that has a 0 balance, you either pay down a credit card to a 0 balance, or if you were already going to open up a credit card for whatever reason, let that be the credit card that you're going to use. I wouldn't just go and open up credit cards for credit card's sake. Don't tell Tiff didn't tell you that, okay? Because I don't want you to open up a card and get in trouble with it. So that's step 1. Start with a credit card with a 0 balance. However you get there, that's your business, right? Miss Tabitha, is you watching, girl? Okay, that's 1. Step 2, identify your closing date and identify your due date. So your credit card closing date is when it's the last day of your billing cycle. So it should be on your statement. And if you don't know, a phone still works. Here's why it's important to understand your closing date. This is when the credit card balance you have, the credit card issuer is going to report that to the credit card bureaus. So here's why that's important. You need to know when your balance is going to be reported to the credit bureaus. That's really important. So that is the closing date. So whatever is on your credit card by your statement closing date, it's being reported. Not in a bad way. I'm just saying they're letting them know. Tiffany has $10 on her card. Tiffany has $5. That's important. Just keep that in mind. And you also want to know your due date. So step 2, identifying your statement closing date and identifying your due date. Does that make sense? Y'all got it? Y'all got it? Good. You don't have to pay twice a month does nothing. I've heard that before. I'm seeing you guys post that. It doesn't. It doesn't do nothing. It doesn't. I'm about to tell you what does something. Okay. All right. So 3, you're going to find your smallest reoccurring bill. The reoccurring part is important. Choose your smallest reoccurring bill like Netflix. Okay. So, and you're going to have that Netflix bill instead of whatever it was charging before. It's going to charge your Jump Like Jordan credit card. Right. So let's pretend this is my priority pass so I can, get in the nice lounges. Right. So this is my Jump Like Jordan card. This is Netflix. Netflix used to maybe charge or used to take the money out of my bank account. No. We're going to put the credit card, this zero balance credit card in the middle. This is step 3. Choose the smallest reoccurring bill and have it be charged to the card. It's the only thing that's going to be charged to this card. You understand? The only thing. You're going to take this card and put it away. Let that card mind its business. Mind your business card, right? It's the only thing. I cannot stress that enough for step 3. Choose your smallest recurring bill, charge it to your zero balance card, and let that be the only thing charged to the card and keep that card at home. All right. Step 3. Okay. Well, Mina, paying, you can pay it twice. So for those of you who are saying if I pay my credit card twice a month, yes, it helps you pay down your bill. It doesn't do anything for your credit score as far as the twice. So if you could pay little bits 5 times a month, the 5 times a month, the number of times you pay doesn't affect your score. It's the how much you pay down affects your score. So yeah. All right. And number 4, automate a monthly payment from your checking account. Allocated for bills. So if you were here day 2, we talked about budgeting and I talked about having a checking account just for bills, your bills account. And I talked about having 2 checking accounts, one for spending, one for bills. So this is your bills account. So card is in the middle. Your Jump Like Jordan card is in the middle. Netflix or whatever your cheapest bill is on one side. And then your bank account, your bills account is on the other. So what happens is Netflix charges the card, bills account pays the card. Netflix charges the card, bills account pays the card. Netflix charges the card. Okay, bills account pays the card. Okay. Now here's what's important because y'all always get this part confused. I want you to draw closer. It is important when the payment happens. I'm going to say a few times because it's going to take a minute. Okay. It's important when that payment happens. The payment should happen after the statement date, meaning the reason why I want you to choose your smallest reoccurring bill is that you want to have just a small little bill on your credit card. You want to have whatever that bill is to be less than 1 or 2% of your limit. So if you have $100 limit, ideally you definitely don't want it to be more than 30%. Anything 30% of the credit card limit is going to actually lower your score. So if you've got $1,000 card, putting 10, 20 bucks on it, great. The smallest amount that you could put on this card automatically every month, that's what you're wanting to do. And what you want this card to do, this is why you pay it off after the statement date, is that you want the credit card issuer to tell the credit bureaus, Vanessa used her card. She put $10 on this $1,000 limit card. You want them to tell them that. Here's why. Because then when you pay it off by the due date, so you don't be late. They also say, Vanessa paid off the card. If you pay off too soon, they never get a chance to let the credit bureau know that you used the card. That part is important. You want, for this particular Jump Like Jordan method, You want them to see, use the card, paid it off in full. Oh my God. Use the card, paid it off in full. Oh my God. Oh, use the card, paid it off in full. Here's the thing. Why I give myself a ponytail today? Because I am cutting up with my ponytail. Look at my locks. Just luxurious, right? Luxurious. When I was a little girl, I used to want to have what I used to call Jan Brady hair because, we didn't have no representation. Because I thought like, oh my gosh, she got swingy hair. That's what I used to call it. Sis, this is all mine. Kinks and curls, and I got swingy hair. Anyway, so that part is important. You want to pay it off after the statement date, but by the due date because you want it to be reported. Sis only used a little bit of her card. Sis paid it off. Okay. All right. Now we're going to go over your homework. Okay. The homework really is just the steps, but reiterating the steps. So homework, remember, step 1, find you a zero balance credit card. Either you pay one off, you already have one you haven't used. Maybe you were already going to get a credit card anyway. And this is the Jump Like Jordan card you're going to start with. Okay. That's homework numero uno, right? Remember, you have to do this stuff within 24 hours. That's the idea. 2, you're going to identify 2 dates. You're going to identify your your statement closing date, and you're going to identify your due date. That's number 2. Identify those 2 dates because it's important to know when your statement closes, meaning when they report to the credit bureau, and obviously when your credit card is due. Okay, perfect. And if you don't know, the good thing is, hello, yeah, this is Tiffany. Got a question for you. What is my statement date? What is my due date? They'll tell you. They usually, honestly, you can log in and probably see it online. You can look on your statement, but if you're still confused, call them. Okay, that's 2. Identify those dates. 3, choose your smallest reoccurring bill. We want the smallest of the small. Don't put no $200 bill on this card. No, put the smallest bill possible on this card because you want to keep your usage as low as possible. So that's really important. So like I said, Netflix, just a couple bucks, your smallest reoccurring bill. And remember, this card is to what? Mind its business. You're going to take this card and it's going to be the only bill that's charged to this card and you're going to put it away. The card's going to what? Mind your business. I said what? Mind your business. So that's number 3. Smallest bill, only thing on this card. Let this card mind its business. Okay? Great. Okay. Whew. So then number 4, last but not least, you want to automate your monthly payment. Bills account on one side, Netflix on the other, whatever your reoccurring bill, Jump Like Jordan card in the middle. You're going to automate the payment, but the automation date makes sense. It has to make sense, right? The automation date has to happen after the statement date, after they done told them people that you use the card, before or by the due date, because you don't want to be late. Okay? Okay. Woo, and wait, bonus as per usual. Remember, like I said before, who's at my door? Like I said before, don't forget that it's super important that you understand that, because sometimes I see people just talk about credit. Credit is one component of your total holistic financial life. I want you to work toward financial wholeness. The issue that I see with us is that we will work on our finances in silos. Like, I got credit, great, but you don't have enough insurance, mama. My budget is cute, great, but your savings account looking stiff. Remember stiff? Some of y'all too young. Some of y'all too young, right? Oh, my net worth is cute. Great. But guess what? You don't have no estate plan. So if something happens to you today, your kids don't get nothing. It goes to probate court. They lose half the money that you set aside. Right? Oh, I'm setting aside, and I know how to earn. Great. But you're not investing the money that you're earning. You're over saving. And so great. You have this savings account that's actually losing you money because it doesn't keep pace with inflation. Financial wholeness looks at all aspects, 10 aspects of your financial life, works towards your greatest good, your biggest benefit, and your richest life. It's super important. That's why I wrote a book, Get Good with Money. You will be able to pre-order February 1st. Line up. It's literally a step-by-step guide and manual to walk you through all the 10 aspects of your financial wholeness, whether you're an NBA player, a mechanic, a teacher, a doctor, a lawyer. Everyone can benefit from financial wholeness. Financial freedom is just for a small percentage of people. For 1%, financial wholeness is for all 100. And I'm excited to offer that to you. In the meantime, go to getgoodwithmoney.com. Get Good with Money is the name of the book. Go there. Go to take the 2-minute quiz to see what your financial wholeness score is. And then I will send you a free checklist that fully explains every aspect of every step of financial wholeness and what you need to do to achieve it, so you can get started while you wait for Get Good with Money. So yeah, it probably is out already. For those of you who are watching, like the recording is out already. All right. Hope this is helpful and useful. This was a little longer. We're literally at 20 minutes on the dot. So with that, I bid you adieu, goodbye, farewell, adidas, and adieu to you and you and you. Good boy.